Positive Trump, negative markets, short-term outlook for silver. To help us make sense of these things, let's bring on Chris Vermeulen from the Technical Traders.com. Chris, thank you for joining us. How are you doing?
I'm good, Patrick. How are you?
I'm doing great. I want to start with President Donald Trump testing positive for the COVID-19 virus. Chris, has the news of President Trump contracting the virus impacted the markets in any way?
I think it has. I mean, obviously, there was a initial shock, and we saw the U.S. equities market crash pretty hard around 1 o'clock in the morning when the news broke. But the market recovered pretty incredibly by the end of the trading session. And I mean, I think a lot of people are wanting Biden to get in, and he's got a big lead. And I mean, if he gets in, there's going to be lots more stimulus. So that is kind of positive on the market. So I think there was a little bit of a pull to the downside, but maybe it's actually looking like it's got a positive effect on the stock market at this point.
Okay, positive on the stock market, a little bit less positive for gold and silver as we're seeing. But
Yeah.
and we've seen silver move from $12 an ounce back in March to just under $30 a couple months ago, and now we're in the low to mid $20 range. Now, again, that's where we are today. But back on August 26th, I was looking at a tweet you sent out stating short-term bearish on silver with the sideways market for next 1 to 2 months. The next significant resistance for silver is $36. Price action reminds us of the 2009 bull market. Now, at that time, if I recall, the charts showed us a symmetric triangle short-term. Price action for silver could have really gone either way. But you made a call from your technical analysis that we may be looking at a 1 to 2 month consolidation and sideways price action in silver starting around end of August, beginning September. What led you to make this correct call?
Right. So more or less, silver had rallied all the way up, and it hit actually two price targets back then. One of them happened in overnight trading based on some news and shortages of mints closing down back then or kind of halting. And when both targets got hit, there was a very sharp pullback within a couple trading sessions. And based on that, the rally up to those targets and then the very sharp pullback, we can use technical analysis. I use Fibonacci extensions, which more or less Fibonacci's really everything in nature is kind of designed around Fibonacci. It's percentages, it's human psychology. I mean, it's really in everything in the world, it seems. And it works just as well on stock charts. So that Fibonacci extension was pointing to $22 an ounce for silver over the next 1 or 2 months. And that's exactly what I was kind of trying to share with everyone. And I said, $22, if it gets down there, that is, don't be worried. That is actually a bullish move, that if it gets down to that level, the market's not breaking down. The silver market, it's actually just an oversold level. It should find support there. Now, if it doesn't, then things are going to get ugly. But it came down to 22. It's bouncing. It's trying to hold its ground. And now we're still in this phase here where is silver going to rally and extend from here, or are we going to continue to see it move lower and break that 22? So we're not out of this multi-month consolidation. It looks like it's put in a bottom, but it hasn't confirmed a new uptrend yet.
Okay. And from where we are today, looking forward until the end of 2020, what are your charts showing you as far as the Q4 outlook for silver?
Silver, I mean, a lot of it's going to come down to what happens with the election, how big some of these stimulus plans are, talks about how many trillions are going to get dumped into the market. I heard somewhere the other day that they were already looking forward and talking about potentially like $40 trillion going to be implemented. I don't know where I heard that, but I heard it on someone talking about it. And that was some of the rumors. But I think a lot of what precious metals are going to do, it has to do a lot with how much money is going to get printed. Obviously, if the stock market keeps going higher, it is going to be a little bit of a headwind for the precious metals for silver. But the more printing there is, the more bullish it is for silver. So we could have this kind of rally where precious metals move up with stocks. They perform very well, maybe even outperform the stock market still. So I'm looking for $34, $36 for the next upside in silver. If we look forward a year from now, it's really tough to say what's going to happen a year from now. But I think we might still be somewhere in this range, because I believe that while silver may rally up, may even go to the $41 per ounce level, I think there's eventually going to be some market correction in the stock market that pulls precious metals down with them. And so we could come back down to this level, $22, $30 range. And then a year or plus from now, we rally back up and we go much, much higher into the 50s, the 80s. So it's going to be a bit of a roller coaster ride. But looking forward a year from now, I think a lot of the gains have kind of been made in silver, and it's going to struggle to really extend to new highs.
And referring to that tweet again at the end of August, because frankly, you nailed it, which is why what you're saying is it's pretty important to silver investors. Short term, what in your technical analysis led you to say 36 is the resistance target? And that's also the number you're looking at toward the end of the year. What does your analysis say about the time frame hitting that resistance target? Will it be up to the end of the year, or will we see it bouncing into next year? When do you think we'll finally break through that resistance target?
I think we could see silver and metals and miners in general rally going into the year end. I think there's going to be uncertainty with elections. There's going to be more stimulus. To me, that's bullish on metals. It's lots of uncertainty. So I think we could see silver, once it finds a bottom here, run up. And I think we could hit that $34, $36 resistance area. That might be the max out for this year. That would be a pretty nice run. I mean, we're only 2.5 months away from the end of the year. But that's about the time frame. The chart pattern that's there takes us pretty much to the end of December for that 34, 36 target. After that, I think January is going to be one heck of a wild kind of reset, a new year. Who knows what's going to happen? I think it's going to have some pretty big volatility. And I don't know which way the markets are going to go at that point.
Okay. Volatility, is it going to matter who is elected? That volatility, do you still seeing it? You still see it being there?
Yeah, so there's a couple of different ways to look at volatility. A lot of people look at the VIX, which tells you how much fear there is in the options market and investors in general. But another level of VIX or fear that people don't maybe fathom or get is that there's very little liquidity in this market. So when selling starts to hit the market, it drops very quickly. And even though the VIX doesn't spike up in a big way, we still see like 11% correction in the NASDAQ in a 4-day window. And that is big volatility, even though the VIX doesn't really spike. So people just need to realize that we're going to have big intraday swings, and the VIX may not actually rocket higher. I mean, I think there was such a big shock of fear in March that it's going to take a lot to actually spike the VIX. But even though the VIX isn't high, doesn't mean the volatility is not high. The volatility and price range is still very high. There's a lot more risk than the VIX leads you to believe. So people just need to realize big price swings. We're looking at 2%, 3%, maybe 4% price swings in the market on a consistent basis as we go into the year end. And to touch on one thing, about a week and a half ago, we saw some of the big brokers like Interactive Brokers raise their margin requirements. And when that was implemented the next day, we saw a lot of selling take place because a lot of traders always buy more shares than their account can safely hold. So as soon as the market pulls back a bit, they start to get these margin calls. And we saw the stock market fall 2% after IB had raised their margin rates. And then on top of it, the Chicago Mercantile Exchange for futures, they increased their circuit breaker limit. So it used to be like 5% before a circuit breaker would go. They increased it to 7 or 7.5%, meaning they see big volatility coming as well, along with the brokers, which is why they're trying to protect themselves. But the CME went backwards to me. They're saying now the market has to fall 7.5% versus 5% before it trips a circuit and halts trading. And I think they see so much volatility coming. They don't want the circuit breaker to trip like 5 times a day. So they're widening it out so it doesn't hit that panic with people more often, which to me is scary. I mean, if big brokers are tightening margins, CME is expanding their volatility range before the circuit breaker breaks. I mean, smart people are seeing kind of ugly times ahead.
You also tweeted out in that same thread again, long-term target for silver is $80 next year. It is good to own physical bullion right now, stack away. What in your technical analysis showed you this $80 level, and what quarter will we be looking at next year when we see this silver at $80 per ounce price range?
Right. So if you look at the monthly charts of silver and you apply technical analysis, chart patterns, and how much they can stack and expand to the upside, it roughly brings us to around that $80 per ounce for silver. So it's pretty straightforward, just using bullish patterns and extending the price up. The thing is, when we get to $80 silver, it's probably going to be quite a different world. I mean, we're going to be in a much different situation, more extreme than we are in right now. I know a lot of people want to see, $80 silver and $5,000 gold. And I mean, it's great if you own a ton of it, but it also means we're probably living in a really rough economy. And it might not be that enjoyable. Who cares if you made some extra thousands of dollars in your savings account? If your lifestyle is terrible, it's not the greatest way to enjoy life. So I think it could be really rough next year. And I think later next year is when we're going to see the metals market really perform. I don't think it'll be early. I think we're going to see some type of stock market correction mid-year. And then I think the metals will come raging back as a real currency and a safe haven insurance type play late next year.
Okay, late next year, we'll be looking forward to some $80 silver. Chris Vermeulen, we thank you for making sense of all of these things going on. You have a good day, and hopefully we can do this again.
Yeah, thanks, Patrick. Thanks for having me on the show.
There you go. President Trump's health, will it or won't it affect the markets? And the short-term outlook for silver to move up to meet that $36 resistance level and increase significantly, reaching all-time new highs in H2 of next year. Let us know your thoughts in the comment section below. I'm Patrick Vieira. Thank you for watching.